And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. Lots of shifting taking shape. A lot of economic data was released last week, and a lot of Trump activity as well. So we, as always, are going to get into that. I'm going to share with you some of that news last week. However, it was not so impactful. As for instance, both CPI and PPI, those are both key inflation metrics, they did come in above estimates, indicating that inflation is remaining sticky. But for the most part, the markets did shrug that off. There also was news relating to tariffs and retaliatory action, and that took place yesterday, and that too was basically shaken off. The markets did fare well last week. We're going to take a look at where that real outperformance was. It was pretty central, and we'll take a look at some of the underlying names within those strong areas, as well as always with an eye toward helping you uncover that strength so you can capitalize on it. Also, we do want to be aware next week, a holiday shortened period. The markets are going to be closed on Monday. And then next week, not a whole lot of economic data. Housing data, we will get a couple of metrics relating to that. And then also consumer sentiment numbers will come in as well. So let's go ahead and take a look at these broader markets and see where did we close for the week. And here we are. This is a daily price chart of the S&P 500. And we can see that the S&P 500, it got to a new high. It closed just below that level, but we are essentially sitting up here at new highs with the S&P 500 up about 1.5%. We do have an RSI that has been positive. It remains positive. And that MACD also up here in positive territory as well. So the broader markets are in a confirmed uptrend, and that new high does give this index the ability to potentially trend higher. Also, let's take a look at the Nasdaq composite. It far outpaced the S&P 500. First up, taking a look at where we closed for the week. As you may know, last week we closed below this key 50-day simple moving average, and the RSI was in negative territory. So a couple of items of note is that we did regain that 50-day simple moving average. We did so on Thursday with heavy volume. Also, now we have that positive RSI. Also, that MACD had been positive, but we are trending a bit more upward. And again, let's go ahead back and take another view. This is a chart that I shared with my MEM Edge report, twice weekly report on last Sunday, and sharing the fact that overall the Nasdaq, in addition to trading below that 50-day, we were generally seeing a rather flat momentum outlook, and that is this RSI trending sideways. Likewise with that MACD trending sideways for at least 2.5 weeks. Now, this week's price action, you can see that we are seeing liftoff on that Nasdaq composite. It did far outpace the S&P 500. Next up, let's go ahead and take a look at the equal weighted Nasdaq QQEW, and it will be the Nasdaq 100 that is of note. And we can see that this particular index has now reached a new high and then some. So very, very positive price action. This is where the haves and the have-nots within the not only the Nasdaq 100, but within those M7s. And I'm going to get into that as far as the ability, there is an ability to secularly look at an ETF that is comprised of those 7 M7 names. But at the end of the day, those that are adept at uncovering the names that are exhibiting more bullish characteristics, you will be able to perform better. It's going to have a lot to do with your investment outlook. Are you comfortable with individual names, or would you rather have that broad-based basket? In fact, we will get into that as we move through. But before we do that, we're going to take a look at the 11 sectors in the S&P 500. This is a 2-month daily price chart view, and it's sorting these sectors in descending order so that your stronger sectors are up here in this left quartile. Here is the S&P 500, and then to the right of that is going to be your generally weaker areas. And let's go ahead and take a look. This is communication services, XLC, hitting another new high in price. And this is where that ability to identify those outperformers. With my MEM Edge report, I have the 2 leading stocks in communication services that are on that list relative to other areas that are suffering. We will get into those names as we move through. Also up here at the forefront, financials, and we are seeing, among other areas, insurance stocks faring well, which is interesting, certainly given that I am in the Los Angeles area and the devastation that I've seen and the dollar amounts that have been talked about as far as what it will take to remunerate insurance holders out here. But there are pockets of strength. Also, we are seeing these bank names continue to excel because of reduced regulatory atmosphere with Trump and the fact that we are seeing more IPO activity, more merger activity, and all of that is quite constructive for these larger banks and their revenues. Let's go ahead and take a look at XLP. And this is something that was highlighted last week. And that is the fact that consumer staples are on the move higher. I will tell you, after doing a deep dive this week into this sector, it is very refined as far as those areas. Again, 2 of the top performers in staples are on my suggested holdings list as well. So I urge you, for a very nominal fee, you can use that link below. You'll have immediate access to that list as well as all of my reports going back and, of course, going forward as well. Now, let's go move through a little bit further here. And I did want to also share with you that technology is inching back up to the forefront of those stronger sectors. XLK was the top performer last week, and it regained in a very orderly fashion its 50-day simple moving average. We now have these shorter term moving averages trending upward. Now we can see we've had that occur a couple of times since the beginning of this year. Ideally, we want to get those shorter term moving averages back above that 50-day. And that's a secondary indication, but it is called a golden cross. And it oftentimes will lead to further upside as the index, or in this case, sector, finds support above those shorter term moving averages. But we are setting up here quite nicely with XLK moving up here to the forefront. And also you want to be aware of those weaker areas, consumer discretionary, continuing to suffer. You can see that the group is still just here below its 50-day simple moving average. There are pockets of strength in here, but a lot of this is going to be Tesla. Amazon is continuing to underperform. So when you have those heavyweights weighing on that sector, it's not going to help. But even XRT, as we move through, we'll take a look at that, and it did underperform last week. And moving along beyond these sectors, let's take a look at some of these ETFs beneath the surface. Again, this is going to really refine that search as far as where that relative outperformance is shaping up. 2-month daily price chart view. And we see IHI is still sitting up here at the forefront. We had this tremendous move at the beginning of the year, but we are flattening out a bit. Makes sense. We are digesting this big move here. You can see we had that MACD crossover indicating that that strong uptrend is now shifted to sideways, but there are still pockets of strength in there. I shared with you BSX from my MEM Edge report, top rated name in that space, still sitting up there quite nicely. But from here, we want to be aware of areas that are coming back into play. And the reason I'm pointing them out is because the move back into these groups, 2 groups I will share with you, is earnings driven. Earnings are going to be the primary driver of stocks that go on to outperform the broader markets. And that's why earnings season, such as we are in it now, can be really helpful as far as refining where that strength is, where investors and where consumers and otherwise are putting their money. Here we are with IGV, and this is the software ETF. And you can see that we did turn bullish a couple of weeks ago. We are continuing to advance higher. The group was up about 2% this week, but all about earnings. And we'll take a look at a couple of those names that have had huge gaps up in price on heavy volume due to strong earnings. And then also moving through, taking a look, and it's not quite as pronounced, but this is the SOXX semiconductor ETF. And you can see we are inching back above each of these moving averages. Top performing sub-industry group was up 2.9%. Now in this area, it is also going to be, you need to be quite selective as far as the stocks. NVIDIA had a good week again, and that's going to help this, but there are other names in here that are faring well, and they are going to be companies that came out with good numbers. Moving through, taking a look at some of these other groups, KRE is that banking up here at the forefront. We talked about this. Now, this is the regional banking ETF, not quite as vibrant as those Goldman Sachs, Morgan Stanley, big money center banks that are very involved in the deal making, so to speak. And also, you do want to be aware of these weaker areas. We did see XHB. This is the home builders ETF struggling here. And this is all about the continued rise in interest rates really creating headwinds for this group, despite it's outperformed, but not quite by much, not ready for prime time yet with that industry group. We can also take a look. I talked about retailers, mixed response to numbers. We are setting up somewhat here with a nice potential double bottom where we hit a low, had a rally, and then hit another low that is below, above this prior low. So we're setting up here, but the names and the broadening out in this group are not quite there. I've talked over the last 2 weeks about some of these shoe manufacturers that are really coming under selling pressure, restaurant names and other areas as well that are dragging that retail space lower. So from here, let's go ahead and take a look. I talked about the fact that we are seeing this shift in the markets, and as a way to give it a name, I would say that high momentum stocks are really on the move higher. Let's take a look at that ETF that I mentioned. That is one. I'm sure there are other ways that you can participate in the move to the M7 names that we did see outperformance, but this is MAGS, Round Hill Big Tech ETF, and you can see that it is in the throes of regaining this 50-day simple moving average, setting up really quite nicely. If we can get that MACD crossover, a little more volume on any upside price action would be quite constructive. However, again, if you have the appetite and you feel well advanced in your trading capabilities, really signaling and drilling down into a look. I have this list. I'm still using the old FAAMG, but I'm going to view this as a candle glance. And quite simply, it will highlight the names that are outperforming. And there are very, very sound reasons for that. I talked about 2 names on my MEM Edge report, and it is these 2 out of all of these M7. Why was I drawn to these stocks back here in a different time? I can tell you that it was a couple of reasons. We did have a move back above the 50-day simple moving average, MACD crossover, RSI trending upward. We did stay with the stock through this shakiness. This was a broader market pullback period as well, and then hung on through their strong earnings, and the stock remains in a nice confirmed uptrend. But most importantly for my work, in addition to looking at that chart, you want to have a good knowledge of the company, their background, as far as where they are focusing, their capital expenditures. Are they pulling back with employment, where they are reducing employment, and thereby having very strong fundamentals in addition to that chart? That's going to make that difference, where you can read the chart, but you really have confidence in management and in what they are doing. Netflix is another name that we've had on our list for some time. Here's this gap up on earnings, all about subscribership increasing. The stock did consolidate here for a bit, but remains in a nice confirmed uptrend. So by employing or having those two names, you would really outperform the overall ETF because you can see that other names are not faring quite as well. Tesla under selling pressure, and also Microsoft is seeing selling pressure as well after announcing their cloud computing division of sales did come in weaker than expected. Likewise with Amazon in their AWS division, which is their primary source of revenue, they came in weaker than expected with their cloud computing revenue and also their outlook. So there is that underperformance that is shaping up here for Amazon. So again, lots of different key moving parts in addition to taking a look at that chart. So when we talk about momentum, I'm going to take us to a view of the ARK, ARKF, KG, and so on. And the ARK Invest funds are going to have pretty heavy weighted names in there. So you will want to be aware of the underlying holdings. But here we are with those ARK funds sorted by that RSI. And this is that momentum that I mentioned to you. Here we are with ARKF already in a nice uptrend, but ending this week at another new high in price. I will share with you some of the top holdings because what essentially takes shape among these ARK funds, and I did mention this before that I ran 2 billion in assets years ago. And when you have a family of funds, I had 7 different funds, oftentimes you will find these stocks that are very compelling. In my case, it was fixed income, and it was talking about the underlying credit of those bonds. And you will populate each of your funds with those name ideas. So a lot of these will have the same names. Let's take a look at ARKK. This is the innovation ETF, and take a look at that liftoff there. This is all about earnings and some of their top holdings. Here's that MACD black line up through the red, RSI trending upwards. So let's go ahead and take a look at some of their top holdings in these ARK funds so that you are aware of where that strength. So ARKK was up 6.8% last week, pointing this out, just highlighting again that the MOMO or high momentum names are seeing quite a bit of buying activity. Here's ROKU. They had a nice gap up into a base breakout on earnings. Take a look at this heavy volume, and that is indicative of a stock that could potentially trade higher. However, if you are a fan or you know these candlesticks well, you will know that ideally we want to close in the upper portion of its daily trading range as a way to potentially indicate further upside price action. Let's take a look at a gap up that occurred. This is another name from my list. It's up triple digits. And here we are with that gap up. This is Palantir, PLTR, gap up into a base breakout, and take a look. Generally, it did close the day in the upper reaches of its trading range, and since then has advanced higher. So without drifting too much, let's take another look at some of the names that are in that ARKK. Palantir is one of them. Also HOOD, this is Robinhood. They are benefiting from the renewed interest in crypto, and we can see they also experienced a gap up on earnings. And again, that high volume, if you take a look at this volume on yesterday's gap up in response and take a look at the average volume over the last 50 days or so, you'll see that this is well above that. And then we did see a nice continuation rally today. Also, going back to these ARK funds, we can take a look at another fund grouping only because the names that are in this particular one are a little bit different than the others. This is ARKF, the ARK FinTech Innovation Fund. From here, I'll share with you just a couple of the highlighted names that are in this particular ETF because it does have Robinhood and some of the other names from the ARKK, but here are some newer names. This is SOFI Technologies, SOFI, and we can see that the stock has regained a presence back above each of its moving averages. That RSI now in positive territory. We're on the lookout for that black line up through the red to confirm the new uptrend. Nice high volume. Another one in that ARKF is a company that also reported earnings. DKNG, for those of you that may have gambled or bet on the Super Bowl, you'll see that the stock had a huge move today, up 15% on earnings, experiencing a gap up on volume going into the numbers. And that's another top holding of that ARKF fund. And from here, let's go ahead and take a look at other names that have experienced a gap up on earnings and how you can use different timeframes of charts to determine whether you want to participate in that name. Oftentimes people want to wait for a pullback, but a lot of times you may not get that pullback once a stock does exhibit a gap up. So here's a name that had a nice gap up today. Airbnb up 14%, gapping up into a base breakout, super high volume. And you can see that we are really gapping up out of a lengthy base breakout, taking us back to July. We talked about ROKU. And from here, let's go ahead and take a look at companies that have already exhibited that gap up and that have been able to trend higher. And I'll share with you a couple of characteristics that tend to take place. And it's going to have a lot to do with the market environment as well, as far as how that stock settles or behaves after a gap up. So here we are with Checkpoint CHKP, one of those software names that I mentioned. We're seeing a lot of gaps up on strong earnings. And you can see in essence, after that gap up on earnings, the stock in essence marked time until that 10-day simple moving average caught up to the stock's price. And then after about 1.5 weeks, the stock did go ahead and advance beyond that gap up. We can look certainly at other names that are not quite as high in momentum, but they are going to be indicative of that gap up. And then oftentimes you will see that pullback to that 10-day simple moving average and then advance higher. We can last up take another look at Palantir, and you'll see that this particular name is super high momentum and it is high growth. So that's another way of identifying high momentum stocks. In this case, it is obeying its 5-day simple moving average as opposed to pulling all the way back to that 10-day. This is where precedence is going to be really quite helpful. Here's the stocks after their earnings release the prior quarter, that gap up. And again, it's that 5-day moving average because it is a faster moving stock by nature. So you were not going to want to use that 10-day. Instead, go ahead and use that 5-day simple moving average. And that's it for this week, everyone. I hope you have a wonderful long weekend. As mentioned over this past week, we have seen a shift in investors' appetite for these high growth, high momentum types of stocks, which is, of course, encouraging. Certainly my style of investing is going to benefit really quite well. But we do need to be aware of the backdrop in the broader markets. And among those is Trump's tariff initiatives. They may come into play as far as looking at their impact on some of these areas, in particular retailers. They're going to begin in reporting their earnings here. Also, you will want to be very in tuned to the yields on these treasuries. So here we are with TNX. I'll end it here, that 10-year treasury, and it did drop. However, we are closing the week just at about that 4.5% level, but a declining interest rate environment is constructive for growth stocks. That's it for this week. If you like what you've seen, go ahead and hit that like button below. And as always, I urge you to take a 4-week trial of my twice weekly MEM Edge report for a very nominal fee. Take care. Have a great weekend.